Hey, good morning, everyone. Brian Hoops here, Midwest Market Solutions. This is Market Insider TV. This is our opening commentary, and it is Friday, August the 1st. Thanks for joining us this morning. We take a look at our trading day ahead. Well, very volatile session in cattle yesterday and the stock market, and some of that volatility spilled overnight into the stock market. We had non-farm payrolls out this morning as well. They were not great by any stretch of the imagination. We're down 56 points, but actually kind of holding in about where we were prior to the non-farm payrolls. So those numbers, the economy added 73,000 jobs in July. That was below expectations of 106,000. Unemployment rate rose to 4.2%. That was in line with estimates of 4.2. So I don't know if we're going to have a lot of carryover into this the stock market today from this news. I think a lot of it has been traded already. But does the Fed need to lower interest rates? Will be the question. I think that's what everybody will be talking about. If we lower interest rates, does that unemployment number come down? Do more jobs get added? And the answer is probably yes. And so this report this morning argues that the interest rates should come down. And it would certainly be a benefit to the American farmer to have rates come down. It would be a benefit to a lot of Americans that have credit card debt or buying homes to have interest rates a little bit lower as well. So dollars trending lower here this morning after this news. We've been noting that the trend has broken. It's trending higher, but we are seeing weakness in that dollar today after this non-farm payrolls number. The crude oil is down just slightly. That gas slightly higher. Talked about the stock market, and gold and silver find some buying interest with weakness in the stock market the last 2 days. Corn down a quarter, beans down 1.5, meal just fractionally higher, continued profit taking ahead of today's census crush numbers in the meal oil share spreads, and wheat's 2 to 3 cents weaker in overnight trades. So let's get into it. I'll be talking about these markets on RFD TV this morning, 8:15 Central Time. Hope to have you tune in to that. If not, we'll get the link and send it out when it becomes available. Follow us on Twitter, Midwest Markets, Brian Hoops, and make sure you visit our website. So you sign up for our daily newsletters, YouTube series, and our text message service. All right, 6-10 day, 8 to 14 day forecast. Look for moderate temperatures and above normal precip. That's a bearish forecast for the grain markets, as this is nearly ideal for pod fill and ear fill for corn. So it's a very bearish forecast in here. Small rallies expected to be sold in the grain markets. Corn has found some support this week from a weekly EIA report and private export sales, as well as strong weekly export sales. Let's see if we can get more exports or even ramp some of those up if the market continues to work lower. Now, it is August the 1st, and as you know, that U.S. implemented more tariffs overnight. Setting rates from 10 to 40% in a lot of areas. Countries like Canada, 35%, Brazil, 50%. Those are pretty steep. Mexico received a 90-day extension, and China's tariff is delayed till the 12th. So a lot of moving pieces in here, and not a lot of clarity so far. Seasonals, however, for the grain markets, we have clarity on that. Seasonals are lower right now, and the dollar is trending higher despite the weakness today. The StoneX and R.J. O'Brien merger has begun. So far, we really don't notice any difference or anything changes. Let's hope it stays that way. But that is now in the books, and kind of a historic day yesterday that was the last trading day for RJO as an independent entity. Technical support hasn't changed here. Corn 407.5, beans 971.5 as your downside technical support areas after a poor close yesterday in the soybeans. Census crush comes out 2 o'clock today. The USDA says total crush expect to be 196.6 million bushels, down from May's number of 203.7. Smallest since February. It is up since last year's numbers, however, and estimates are in 195 to 198. All right. August live cattle options, they go off the board today, and first notice day is Monday, August the 4th. Do want to mention, it was a wild day in the technicals in the cattle market. Really, the fundamentals haven't changed. Those cutouts were mixed. They're higher at midday, mixed on the close, and cash cattle trade was stronger yesterday. 235 in the south, consistent with the previous day's trade at $3 higher than last week, and trade north at 244 to 245 and 383 to 385 dress. So steady to better than a week ago. Cash trade not backing off here, and I think that's what really is needed to get the futures market to drop, is a weakness in the cash markets. The futures remain strong. We'll see. We'll know very soon by today if this is just a one-day profit-taking wonder, or if this is a real deal where we break hard in the markets. August feeder cattle have seasonal weakness in the next several weeks here, despite its discount to the cash market. So seasonally we break here, and feeders especially, and fats do kind of follow. All right, I'm going to sign off here and wish you a wonderful day of trade. As always, reach out to us. Be glad to talk markets with you. This has been Brian Hoops, Midwest Market Solutions. Good luck and good trading today.